I'd be happy to come on. Hello, traders. How's everyone doing? I have a special treat today. A great guest who is very bullish on a super cycle basis in the silver market. Why don't we just take a look at silver right here and know that we've been in a bull trend for quite a while. Here's a look at the weekly. Okay, so we've had a double top here. So, we had this high back last summer, and then we took it out by a few cents here. And we tried to make our way back up there. We got rejected from the 78.6 level. But today we're going to take a look at the precious metals, not through a microscope, which to me is like, 4-hour chart, 2-hour, 15 minutes, sometimes even a daily. So, you can miss the forest from the trees unless you really go out to your weeklies and monthlies. And it's going to be interesting to talk to Patrick. I've interviewed him a few times, and his Twitter handle is badcharts1 at badcharts1. Is that correct, Patrick?
Hi, Dale. Yeah, that's somebody took bad charts, man, and I hope they're not getting any insults when silver doesn't reach my targets there. If somebody
Okay.
missed, then
All right. Well, it's like that movie, We Be Bad. I think it was Richard Pryor when he was walking into prison where, he had to put on an act that he was a tough guy. And he said, uh, I'm bad. So your charts are so bad, they're good. And just a quick update for everyone today. A dollar is following through to the downside here, which is when the dollar is weaker, it should create support for almost everything, including stock indexes. I'm still looking for one more high in stock indexes. Dollar should be supportive for the metals, both gold and silver are higher today after a wild day. In fact, you look at the gold, and a lot of people are saying that this line that we had here, you could tell on a weekly, if you just take a simple trend line, that we're cracking it here. Believe we have to hold the 1850 level, 1860 level for this to be a continuation move. And without further ado, I'm going to bring Patrick in. Patrick, welcome to TradeGate Hub. You were with us about 6 months ago, and silver and gold have had quite a run. I'm looking forward to seeing your work and what you're thinking now. So, welcome to TradeGate Hub, Patrick, and take it away. I want to see your charts. The picture speaks 1,000 words, and looking forward to seeing what you have to say today.
thanks, Dale. Thanks for having me back. It's already been 6 months, man. Time
Yeah,
it flies. It's
yeah, it does. Look how old I am. So I know how time flies. You don't know yet. But anyway, if you would start sharing your screen, we could take a look at
yeah.
some of your bad charts, which are great charts.
Let's do it here. Share. You guys see? You see it?
There you go. We have your website up here.
Yeah, because with Kevin Wadsworth, I think you've had him on North Star. We have
Yes.
this we like northstarbadcharts.com there where we combine putting all our charts there. And I
Okay.
just searched by author I searched for Patrick Karim, and there's one chart I did for silver. And guys who are not members, you're getting a sneak peek inside the Madhouse guys. And there
Okay.
was some work done, I think, like by Gold Ventures, and then Jonathan Murgut. He went on it, and it's these old school guys. You're gonna notice this. This is the fractal, an insane fractal from the 1970s bull era compared to
Okay.
today.
I was around. You were in Pampers,
I
right?
was born in '76, Dale, right here.
Okay. Okay.
I didn't know I didn't know what the hell was happening in
All
silver
right.
at that
Well,
time.
I had just graduated college. What's interesting is I came into the business during an inflationary era. In fact, I was a broker and trader for the Hunt squeeze. It took silver to $50, and Then Comex changed the rules, kind of like China wants to change the rules on crypto, and silver became liquidation only. Gold peaked during that cycle at 880. Gold has way surpassed that high. Silver peaked at the $50 level, and we've gotten there once before. But that $50 mark was tough. And, a lot of the bears in the precious metal complex, and there still are a few out there, deflation people,
Yeah.
they're actually saying that it's a bearish point that silver hasn't confirmed gold's move by taking out its historic highs and making new highs. What's your answer to them when they say that, Patrick?
Well, I look, the a chart trader, he bases everything on past to see how price behaved previously, and then he could see how it's going to probably behave in the future. Because you have to remember, at the end of the day, chart trading is analysis on human emotions. So it's humans behind all of this. It's humans that do the programming and whatever software. It's humans that do everything. Silver has always, whenever gold did a new high, silver has always followed suit. And I had a great chart on that one. Maybe, I don't know if I could maybe try to find it. Hold on. Clear out.
I'm assuming that you also follow the gold silver ratio, for which is providing leadership and which one is leading, which one's following. And we had a pretty good move to the upside in the gold silver ratio this week. That gold has been much more resilient this week. Silver never recovered from, I think it was Tuesday's highs, although it looks like it will because of a confirmed high on the RSI. But gold seems to be acting a little better than silver. Maybe some people are thinking that the best news in the economy is behind us, and the Fed may, they're talking about it in the minutes, possibly tapering sometime in the 21st century. So go ahead, let's see what you put up there for us.
So silver never failed to do a new high after gold did. And but you got to understand, it's how much time it took after gold. So gold's always the first one. Everybody says, oh, gold's lagging, copper's up, something's wrong with gold, when gold was correcting recently. But what they forget is gold broke out in 2019 in July. Gold already broke out. Even silver broke out in 2020, I think in June. And gold's just taking a breather while the other commodities are following suit. All the inflation or all the monetary imbalances that gold was sniffing out, uh, platinum, copper, everything, even oil, they're the laggards. And so is silver. And this chart, what it shows is every time gold did a new high, silver did a new high, but it took time. So the first time, it took 13 months. Then after that, it took 5 months for silver to catch up. Then 40 months. And this could have maybe been shorter if we didn't have the GFC. It was on track to follow gold. And right now, we've been, when I did this chart in March, so now we're already 11 months in. We're in that zone, Dell, where at any moment, based on previous time, the lag that silver exhibited before doing a new high, we're in that sweet spot where I know I keep saying it at any moment, but it's true. It's at any moment, the silver is about to go do its all-time highs and catch up to what gold did. The deflation, guys, I'm always trying to wrap my head around that. I've had a chart about where I define inflation. What's inflation? Could I show that one, Dale?
Yeah,
Please.
sure, you can. This is you have power of attorney over your interview. Patrick, there used to be um, a correlation back in the 70s between soybeans and silver, and they traded together, sometimes even at the same price. And you're talking about inflation in bull markets and commodities. The grain market, including beans, used to be a big war chant on the Board of Trade. Beans in the teens, beans in the teens. And yeah, and we've done it a few times, and the beans actually got to about $18. So, I think as long as you have a strong grain market as well, that supply that creates impetus for silver, even though you can't eat it.
They, they all track each other. Honestly, if you put this in the inflation chart on probably all commodities, sugar, this is the inflation chart since 2000, since 19. I love long term data since 1915. And here you
Yeah.
see the peaks. I could overlay the silver chart, the gold chart, the sugar chart, and you'll see the rate of change. It's the same types of peaks and valleys. And about the deflation, like I had to define because I tried to wrap my head around deflation. This is a deflation event when we have negative inflation going downwards.
Yeah.
If ever there's a deflation event, sure it could happen, but for me it's going to be a spike down, and after that the monetary imbalances, the Fed, whatever, like fiat endgame, they're going to start printing and we're going to start building. We're going to reflate. So reflation for me is when you're still negative, but you're creeping back above. And once you're above the zero line, you're in positive inflation. Then I call that inflation. And
Okay. Yeah.
so
So, you have to go all the way to the left to see extreme deflations. Like, it looks like we had the worst inflation was before the stock market crash in 1921. I
right,
didn't know that. So thank you for edifying. And then we had a higher low, but severe inflation after the crash, and really didn't come out of it till World War II. So interesting. And this says it's embryonic. So even though you're not paying $8, $10 for silver like it was a year or so ago, um, it's still early in the game.
it's super early. So the right now I did some this region here, like a lot of people are saying we can't get the rates can't go up, but I'm pretty sure I've done other charts, but there's a good chance that we're around this area here. So we're around at any moment we could, as soon as there's a trend line here of inflation. I think this chart, look at 168. I think we already had I think it's already breaking out, right? The last reading was about 4%, the US inflation rate. And we
Okay.
could be at this region right here. It's mid 1960s. If I could draw a trend line here when it breaks out, if I draw a trend line here and it breaks out, um, we're an inflation cycle. Could there be disinflation? So inflation going less and less high along the way, of course. But right now, we're most likely, we have bottomed this like 40 or 50-year cycle and we're restarting one, just a new one going upwards. It's going to be just pretty much insane.
I have a question. As a technician, part of the reason, in fact, I even asked this question of Jack Schwager. And you know what? You're the warm-up act for Jack is going to be here next Thursday. Ever hear of him? Jack Schwager,
I heard the name. He's an author.
author of Market
Uh,
Wizards.
uh,
You may be one. You could be in the next book. But, he talks about the difference between technicians and fundamentalists. And one thing that's an advantage for a technical trader is compared to a fundamental trader is they have price points where they're wrong so
yeah,
that they don't blow up. Whereas a fundamentalist really doesn't have any kind of really money management. And like you're saying, you're looking at these charts that it could happen at any moment, and the moment could be a year
yeah.
or two. So, is there any price level that would negate this super cycle move that we have here? Personally, I think there's potential um, for silver to trade 23, 22 again, which is just back to the recent range that we've been in for 6, 8 months. Is there any level where you would say this is a boarding if silver, say, traded, $15 or
Well,
$18?
it's if something like that happens, it's I'd have to zoom out and see where my monthly or my quarterly close would close, because remember in March silver went all the way down to 11 or 12. But if you take
Yeah,
a step back and you wait for that monthly close, that wick, it
yeah,
closed, let's say, above important moving averages on the higher time frames.
yeah.
Um, so you
That
got
was
to
the
really,
buy of the decade on the COVID
oh
crash,
man,
wasn't it?
but it's
Yeah,
super emotionally. It's even me. I was awestruck. I like, whoa, what's happening? Because when the price goes red, 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 you could have the best game plan, but gee, unless you're a robot and you have, it's hard. It's really hard to pull the trigger on those. But that's like when you understand cycles, when you understand that we've been in the disinflation cycle since 1980s for 40 years, and we're very close to having a inflation cycle where we get higher and higher inflation. Once you start understanding the larger landscape, then
Yeah.
when you have a price drop like that, you know it's not a top, it's actually the inverse. It's a false breakdown, and then you have a chance of going back up.
Right.
And
Okay.
so for silver right now, even if there be a drop and it'd be
Even back to cloud support, I'd back up the truck if it broke back down to your cloud support. Looks like it's around $23 or so.
exactly, see how that wick, it just perfectly
Yeah.
touched it. And in an
Yeah.
uptrend, you're not going
Yeah.
to go deep inside the cloud. You should always stay on the outer rims. Uh, Always close above the 10-week, the 30-week moving average on the weekly chart. Always trying to stay above that. So it's tough. And here I have my volume profiling, which gives me sometimes you want to see the weight of the price action, and the longer the price action stays in a range, then it creates a lot of volume for that price action. And then after that, I call that like the vacuum. So as soon as there's no, I could go live. I'm gonna go. Let me just pop my silver chart, put my volume profiling, hollow candles, just to back it up.
Yeah. Okay.
Hold on. And we'll see the volume. The volume is going to start showing up. Sometimes when you look at a chart and you look at patterns, and unless you're like a pro, like let's say Peter Brandt or somebody who's like seen, like I've noticed the best like chart traders, they don't need any indicator. They put everything on mute and they look at the chart and they know where the weight is, where the weak hands. You see this huge volume defined base.
Yes.
This those years of consolidation, all the weak hands, all these guys that bought at the top, they're out. They're not even there anymore. And that's why as soon as we broke out above this horizontal right
Where
here, the
was that?
sweet
About
spot,
$20 or
yeah,
18?
17, we started sliding. We were fighting above
Yeah.
it and it got thin. And that's why we just, woo, we like on
Yeah.
the way down, it goes down so fast. There's not a lot of people that have time to buy there. Like there's nothing here. So it's a vacuum. And now we're consolidating right below this monthly defined wall right here.
Interesting.
And
So that's why there's a problem because
that's what, yeah.
the
And here
market, the memory is to its left. Okay.
always,
All right.
and here we're creating a volume defined node. So we have the volume here. And now the longer we stay here, we're creating a volume defined node, which is great. That's the one we saw on the weekly right here, all that volume, because that's going to serve as a base, a beautiful base. So once we explode above that, if ever we come back and test that line, which is now going to be a support, it's not going to break easily. It's gonna be stronger. You want these huge bases, because these stocks that go parabolic and don't have time to create a nice base, when they break down those parabolas, it's game over. It retraces 50, 60, 70%. You're in free fall,
Okay.
So the longer we stay here, the healthier it is. But as soon as we break out, we should skyrocket to all-time highs. Because you bear with me, I'm just going to show you the gold chart, what it did. Once, we're
Yeah, I
drawing.
see that.
Once it broke out above that line, look what gold
Yeah.
did. It just rocketed to its all-time highs, and
Right.
then it consolidated. So I'm expecting silver as soon as we have a month like this, where silver breaks out above that line, that wall, it's
Yeah.
gonna rocket, just
And that's
rocket up,
about 30, the walls at about $30
just
on
about.
silver. Yeah.
Monthly close above that, and you could expect like there's noise along the way, but for the next 4 or 5 months, even probably faster, it's gonna go to all-time highs. So that's why this summer, and probably overshoot. Like markets always get emotional, and then still everybody's on the silver squeeze or whatever. So silver should be closing above monthly defined all-time highs in the next 2 quarters. So I have a great Q3 or Q4 for silver lined up, and probably overshoot on smart time frames. And then when we get stretched far away from its moving average, when everybody thinks it's going to go to the moon. So if this is a distance, I always plot the distance from the 1 year moving average. So as soon as we get stretched to these crazy levels here, every Warren Buffett, Elon's going to be buying silver miners at this stage. This is probably the time to sell. See how far it's stretched.
Yeah.
And then after that, that's probably the time to take profits. If
Let me ask you, what's your reaction to the Reddit crowd trying to get on board and create a squeeze? My take is it's much easier to manipulate an individual issue in the equity market than a global commodity market like silver, especially when you're going against JP Morgan, which has tons of silver stored away. So they can sell the market, the paper market, and control prices because it's not an outright short. It could be considered a hedge. Do you really think Reddit is going to be an important factor in silver going up? These social media groups
yeah.
banding together, that they'll claim responsibility for it, but do you think they that they really have the muscle and the power to create a short
Well,
squeeze in silver?
look, I'll just show you the historical chart. While I, at the beginning, I was kind of, I was on the stance. Nobody has any impact. The chart, it's supply and demand, it's contraction of price, then
Right.
explosion of price. The more the price was subdued for a long period of time, the more that, like the water balloon, under the water, then it just explodes up. But I really believe that it's more the macro tidal waves, those inflation versus deflation or disinflation cycles. Those are the primary cycles. Let's say you do a ratio chart of silver divided by the Dow, and when it starts turning upwards, the capital flows leaving U.S. equities because there's inflation into hard assets. Because it's just like that for me is a primary driver, and all the manipulation and all that. I think those are symptoms of micro tidal waves. So whatever we're doing on the smaller time frames, everybody here is talking of JP Morgan or their manipulation comics or
Yeah.
whatever. I think I don't want to go into conspiracy. If it's happening, yes or no, it's happening because the macro uh, is permitting them to do that. Those low interest rates are permitting them to lever up, borrow money, short even more, etc. But as soon as the inflation starts going up and the rates start going up again, or it's game over for that. Naturally, all that manipulation is going to disappear because no, I don't get it. Where's the manipulation from 2001 to 2011? It's
Yeah.
price went up. So
Yeah.
it's
That
all a
was a
question of the macros permitting these games to be played. So it's like when mommy and daddy come back home, the kids they can't do the same tricks that we're doing with the babysitter, right? It's time discipline's coming back. So
Okay. So speaking about babysitters, let's bring the Fed in here. So everyone thinks everything's about yields, and you're talking about higher interest rates and higher silver. Is it because it would take us rates to go above the nominal rate of inflation for them to have impact on the silver price? Because I do believe that we have had periods with rates going up and the metals going up as well, and even the dollar.
yeah,
So a lot of people be surprised that the dollar and the metals could climb together.
that that's why sometimes when you hear people have the, today the dollar the gold's tanking because the real rates are going
Yeah,
up. You got to take a step back because you always have to look at history, and there's periods here on this chart is silver going up with real rates. So on the short term, so it's the Fed fund rate minus inflation, they were
yeah,
going up together. And what
nice.
happened actually is silver actually topped when the real rates plummeted. So right now, I look in the 70s, it went up with real rates. And then the end game, when the real rates really plummet, and when everybody thinks it's the end of the world, that real rates are going to go stay negative, minus 10%, whatever, forever, that's actually the time
To
that
buy.
the silver tops.
Yeah.
So,
Okay, interesting. So you back it up with what I just said.
yeah.
You're a mind reader. Okay, so actually, it'd be a bullish case to see the 10-year go to 2.5
Yes,
for
yes,
silver rather than a bearish case.
yes, I think so.
And okay, and there it is visually for people who think that we're crazy because charts don't lie. Only you know, only your psychology lies to you. So, okay, there we have one of the bearish arguments being put to bed as not being valid. What else, buddy?
Well, yeah, that chart was kind of a almost not a trick, but there's one thing you have to notice is the DXY at those moments was tanking when those real rates were going up.
Yeah.
So it's a combination of of all these elements. It's inflation going up, it's the DXY suffering because the real inflation is going to depress, let's say the DXY. It all goes together. So as long as the DXY is tanking, while even if the real rates start going up, that's a very powerful combo for silver. And silver and gold are going to go parabolic when it's both happening at the same time. So
So do you have a target in the dollar index? Something like, I know some of the bears are talking as low as 60 on the Dixie, 55. One thing I want to point out to our viewers is if you notice, a lot of Patrick's charts are monthlies. And I would bet at least 50% of the traders out there don't even click their charts where there's an M. They may look at
wow.
weeklies, but the monthly is what gives you your biases. Am I correct?
Uh, I think the monthly is just a sweet spot enough where the higher time frame on the monthly is strong enough to really save your butt if your timing's not good on the shorter time frames. Let's say you
Mm-hmm.
get in too early, but monthlies, and it's short enough that it's not in your life. You don't have to wait 10 years to get a good signal, right? Yeah, you just have to wait 30 days and then you get your breakout signal. If you can't wait 30 days to get in on the right side of a trend, you're just going to get cut by, you're going to lose like by 1,000 cuts, right? You're going
Yeah.
to in, out, in, out, in, out. And then just, you could have just waited at the end of the month and then you get a clear signal. And then you know that you have you have a higher chance of that tide, saving your butt.
I just saw a tweet that you said floor for the dollar is 72. And I also wanted to ask you about the miners, if you follow the miners, because there are some ETFs that people could buy without having to do a lot of due diligence on. There are a lot of silver companies that have silver, but they also have a lot of debt. Okay, and you could have a bull market and a poorly run company, miner, and not participate. But I'm wondering if you think that the miners will participate. I kind of am watching SILJ, the junior miners ETF. There you go. All right.
Yeah.
Everything I say, you're ready for it. All right.
Man, I have a chart for everything, Dale.
All
It's
right.
insane.
Non-greedy 26.
Yeah.
Okay.
I
All
say
right.
non-greedy because usually when anything's based in a fiat currency, which is like exponentially or has a
Yeah.
half-life that's depreciated so fast, yeah, you could cheat and put on the log scale these type of charts, right? Because they do tend to move logarithmically, but at a certain stage they start like slowing down because it's unsustainable. So when I see non-greedy on a linear scale, this is like old school classical charting where just measured move in dollars, not in percentage. So if you
Yes.
add like let's say a $9 move, $9.60 from the bottom to the top here, and you add it on top, I get already a $26 target, non-greedy $26 target for the silver junior miners. And if I rely on this incline, it could happen at any moment in Q1 of 2022 in that area here. Maybe a
Uh-huh.
spike before we should be hitting hitting those targets.
Okay. So what would be a greedy target?
Okay,
Do you have that calculated?
no, check out. I'll have to do stretch until I hit 144%. Because that's 144% is the log move. Oh boy, I'm gonna be a millionaire, Dale.
There it is. So it's what?
About 40. Yeah, I've done this one before, so it's about 40 this move. So if I put on the log
40.
scale, it doesn't look that
Okay.
bad, right?
Yeah.
And about here in 2023, Q1, Q2, 2023, we could start to think that we'll be hitting that $40 target right about here.
Okay, Patrick. I tell you what, it was really an excellent interview. You want to wrap it with something, and what would be your advice? Should people also be stacking physical? Do you foresee a time when we'll actually use, a Morgan silver dollar for bartering to buy our things, or do you believe that people should not just have it on paper but have possession of silver and gold?
Yeah, you should. I think it's you need something hard and real. Are we going to barter with it? Maybe, maybe not. But we need to have something that's going to show that you have the true hedge. That even if you never use it, it's you have that physical, tangible thing that's there. Either emotionally, you know your family's safe. You know you have something physical. If so, are we going to use it? Maybe not, but you need something to keep all those fiat currency experiments to keep them in check. And the only thing you could keep them in check with is a gold and silver, and or hard assets. But gold and silver for me, it's like it has that history and everything. So you need that to balance and keep people in check. Because if you don't have any, you could get away with anything, right? It's like kids if they don't have they don't respect their parents and there's no discipline when they do something bad, they'll just keep doing it, right? So our governments or whoever's out there, if they know that you have something that's real, that's going to show the the devaluation or all the monetary craziness they're doing by that price of that thing that's real that's going up, uh, that's a big uh, that's a big protection, a big mirror, and whoever's like it's a truth mirror to keep everybody in check there to stay honest. Because when gold, it's like it's gold, right? It doesn't change. But if you cost you 20,000 for gold, that means somebody on the other end is devaluing their fiat currency. And one day people are going to wake up and say, "What the hell's happening?" People are seeing it with milk, right? Like
Yeah.
milk's a hard asset. It's a staple. You consume it, but same thing. And
So anything with intrinsic value, and
anything,
silver being, you're probably looking for the gold silver ratio to come in under 40. I remember it being
yeah,
there. It's about 68 now. What an opportunity it was when it was over 100, where you could have done, and that wasn't that long ago, Patrick, where you could just give them one Krugerrand and get 100 pieces of silver, and now you get half as much silver as you did. I think it was about 9 months ago. So, really great interview for an asset class that I've been interested in my whole career. I've lived through bull and bear markets in silver over the decades, and um, your work is elite in the
oh,
commodity space, Patrick. I want to thank you very much for giving us some of your time here at TradeGate Hub and edifying our community. I hope you and all your subscribers, and maybe you want to show your website again so that people are interested in taking a look at
oh,
following you and getting more information for you. They could go to your new website is northstarbadcharts.com.
that's right. Thank you very much for that. It's all there, and with Kevin, he's is like a he's another mad genius of the charting. We have two different type of techniques, really different, but
Yeah.
it gives you two different views, and it gives you a lot of added value if you could add different views and angles to an instrument, and that's what we're always seeking: more evidence, always more evidence.
You guys are good attorneys for building a case for silver, compelling case. And, they say a picture speaks 1,000 words. Your charts and Kevin's charts speak a million. So thank you very much, Patrick, for being with me and our community today. And good hunting. And look forward to talking to you down the road when this thing is beginning to manifest. So again,
Awesome.
good hunting, my trading warrior brother.
Yes.
Adios.
Same here. Ciao, Dale.